Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate with your host, Kevin Perenio. As an owner and C-level executive for 20 plus years in finance, KP is here to serve you with all of his knowledge and experience. Whether you're a broker, realtor, or just interested in the economy, this is the podcast for you. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Brooklyn. Look at this gorgeous view. We're at the William Vale in Williamsburg. I'll go a little slower. It's a good vibe. I'm here in New York City for a wedding. A buddy of mine's getting married. It's pretty amazing. And there's a lot going on in our business right now. And I thought I'd give you some sunshine, some sunlight. Pretty amazing. I don't even really need this jacket on. I'm just wearing it and the sunglasses because it's a little bright. A nice brisk autumn day. Yankees are playing the Astros. A lot going on in New York. And my buddy is about to get married right here. My buddy Sean Murray, who I've known for over 20 years. We're having his rehearsal dinner here tonight. So I head to Nashville for the Mortgage Bankers Association National Convention. The Super Bowl, that is on Sunday, should be pretty eventful. Okay, so let's talk politics a little bit. First of all, I want to say, David Lykken, thank you so much for allowing me on your show, Lykken on Lending. That's Lykken, David Lykken. For those that don't know, he's been around our business for some time, and I started 21 years ago in Austin, Texas, which is where he was based, still is. And I've listened to him for many, many years, and it's always an honor to be on his show. It's kind of like if you're a rock band and you get to play at Austin City Limits or the Viper Room. It's just one of those places where, you know, it's just an absolute privilege. So thank you, David, and that recording just came out. I will say I was absolutely wrong. Something that didn't age well on David Lykken's podcast. I really thought rates had peaked. The 10-year had peaked with the June 10-year high on the Treasury. The high on the 10-year Treasury. And man, it's gone up way since then. So let me just say this. This is a very volatile market. I may be wrong for 3 months and things may come back down. But if it's 3 to 4 months of very volatile 10-year Treasury costs, that will cause a little bit of upward pressure on interest rates. And that's going to be the same until the Fed says, hey, we've tamed inflation. And we just haven't done it yet. And so inflation is still the number one target for the Fed right now. And that will continue to cause upward pressure on bonds, treasuries, suck money out of the stock market, equities. It's just what it is right now. So existing home sales, new home sales, all the numbers that are coming out, it's ugly. 25-year low in applications for housing. It is what it is right now. The Fed wants to tame inflation, and the federal funds rate being raised is something that absolutely will continue to put pressure with a draw of liquidity out of the system. Remember, everything we do is buying and selling money, and if the Fed is drawing liquidity out of the system, there's less money to go around for everything. So right now, when there's less money in certain segments of the market, bigger players have more power. So in the bond market, the Treasury market, they call them the bondinistas. So these huge institutional traders, the Blackstones and the big groups like that, they have a ton of money that goes into fixed income securities like treasuries and mortgage-backed securities. And when there's less buying and selling going on because there's less liquidity, you can have an outsized influence on a smaller portion of a market segment. We all buy and sell money. It happens as well in the mortgage industry. Some people don't like losing money. Some people don't have the stomach to get through these times, and it is hard. Human nature is the same no matter where you are. It is hard. It is hard to stomach losses and deal with pressure like we've been dealing, whether it's the stock market, the bond market, housing, or whatever. But, tough times don't make tough people. Tough people defeat tough times. And I totally made that up. I might have screwed it up, but I think either you're tough or you're not. Either you have the ability to stomach the craziness or you don't. And right now it's absolutely crazy, and there's still more downward pressure to come. And that's okay. We're going to get through it. Just remember, the last 2 years are really good. So what's going on in the stock world? Remember, I'm not a financial advisor. I am not responsible for your losses, only your profits. I think I mentioned on my last video, I cut a really good first episode with the production team. And man, I got a chance to look at the first draft. Man, these creative editors, they make my little ugly ass look good. Now, I didn't wear any makeup, but they make me look good with my ums and my pauses and all my flaws and all my, imperfections. I'm only human like everybody else. Just because I'm on camera doesn't make me anything special. I'm just like you. I'm just a voice of the people. But let me tell you, I'm really impressed with the editing team, and hopefully we'll get some good content out for all of you to share. And then you can share with your business partners, your realtors, your borrowers, everyone, your originators, your teams. We're here to serve on this channel. Having said that, the stock market's crazy. Apple reports next week. They're a big part of the S&P. Tesla reported. They didn't quite get out as many units. They were able to kind of maneuver the chip shortage, but they kind of beat, kind of missed. It's earnings season right now, so it's put up or shut up time, right? A lot of strategists right now on Wall Street are very bearish on what's going on in the markets, whether it's housing or stock or whatever. But the analysts, the people that look at the data, the people that look at everything, are actually still generally positive, slightly positive, and that's good. You got to be positive, right? If you're in a firefight or you're in a fist fight or whatever you want to say, whatever your analogy is, and the person next to you is negative, oh, we're going to die, this sucks, it's terrible, get out of my foxhole. I don't want you in here. We're going to win. We're going to fight through it. It's going to be better eventually, but you got to fight through it. Nothing is easy. If it was easy, everyone would be in our business. Everyone would be doing what our profession is, whatever you do, and dominating. So a lot of times mindset matters. So if you're Elon Musk, you're not catering to the haters. You're not catering to everybody out there. You're saying, you know what? We got a good business. People like our vehicles. We're putting internet access in Ukraine and all over the world. And we're creating rocket ships that are going to friggin' meteors and mine it for rare earth elements. All right. Give you one last look here. If you stay with me this long, I'll see you in Nashville, maybe. Here we go. It's just an amazing little scene here. If you stuck it out for my 7 minutes of rambling, you deserve an almost sunset. Here we go. We're going to stare into the sun. Cheers. Hey, it's KP coming to you live from Nashville. My 5th and final show from Nashville. My last show of the year. I can't wait to be at home with my children for the holidays. No more work travel. We're here at the Super Bowl of mortgage banking, the Mortgage Bankers Association, the MBA annual convention. It's here in Nashville. We had the Independent Mortgage Bankers show way back in, I think, January, and then they finished the year with this show. It's a big show. It's well attended. It's a lot going on. I almost started filming a couple minutes ago, and there's Jim Park from the TMC.
What's going on, baby? How are you?
We made it.
We did it. Love you, man.
You good? You're live.
Right.
You're live with me on LinkedIn. You did.
You know what?
You did better than Kelleher. You actually randomly found me while I started filming.
Dude, how you feeling?
I feel great.
How do you feel about the Sandra Thompson announcement about the credit thing?
I you know what? It's better than a sharp stick in the eye.
Yeah.
We're gonna try and help out the underserved. I get it. Cash out is for people with equity, and you're churning off the LLPAs for those that need to get into a house. So yeah, it's a fair trade-off. It's fair.
Yeah, we'll see how it plays out, right? It's supposed to expand the bucket, but ultimately,
hey brother.
Ultimately, a little competition is good, and we'll see how it all plays out.
They're getting into the FHA space a little.
A little bit.
but that's okay.
That's all right.
We have abundance mindset here. There's a lot of business to go around.
Plenty. And we need it this year.
What are you looking forward to next year?
You know what? I think my view is this: good people will survive, do well, and we'll be here to fight another day, another year from now. So
That's right.
you know what? Sort of we have to adjust to this new reality. I don't think we can hope for another refi boom coming our way. I think we have to prepare for a tough year. But people like you and others you have been getting ready for it, right? So
We're all grinding.
You're all good.
We're all grinding every day.
Every day. All right, brother. I love you, brother.
I love you too. Jim is the reason I was at the Housing Renaissance, which was an amazing think tank experience for me. And we are going to expand home ownership together.
Yeah.
And man, 2 nights in a row.
2 nights in a row. One more night. Get some rest. Take care, everyone.
Hey,
I love you, baby.
be good.
All right, take care.
Cheers. So that was totally unplanned. There's a lot of people on the streets here, and that was cool. Jim's a really, really good dude, like a strong advocate for housing. The Mortgage Collaborative, Rich Slavinsky, it's their baby. And there's so many people I could mention. All right, so I'm going to give you a little scenery, a little break, and then I'm going to go back to housing. Brad Paisley, Johnny Cash, the man. Willie, I'm from Texas. He's part of the Highwaymen. Luke Bryan does he even deserve to be in there? I mean, maybe. We got Reba, who might be the greatest thing from the state of Oklahoma. Do you know why Texas doesn't fall into the Gulf of Mexico? It's because Oklahoma sucks. We got George Strait, by the way. Dolly. Who's that? Garth Brooks? There we go. All right, before I go down here and give you guys more scenery, and there's a lot of scenery. There's a random bar here. Let's go. Let's go. There's a random drummer. Let's go. Let's go. Oh my gosh, how are you? How are you? You're alive. You just made my LinkedIn. You made my LinkedIn. I did. Let's go. Let's go.
She's amazing.
She is.
You guys are amazing. She's amazing.
Okay. It's been that kind of week. I'm not going to get hit by a car here, although there was a car here earlier. There's Broadway. Okay. All right, let me rein it back in for those that are still paying attention. I'm going to rein it back in. Mike Frattantoni, Marina Walsh, and Joel Kahn had their data presentation that they do every year at the MBA, and it was their latest release on Sunday. And if you saw Jim Deitch's from Tierra Verde, if you saw his post, they are only calling for a $2 trillion a year this year. $2 trillion for the entire year of 2022. That's a bit. I mean, their last call like 3 or 4 months ago was like 2.4. So it is a tale of two halves. It is a tale of two halves in the mortgage world. Okay. Second half of the year is brutal. Rates are high. I'm seeing inside emails from a lot of different places, but on the mortgage securities trading side, I'm seeing people calling for the 8.5 coupon. 8.5 coupon. That means 8.75% interest rate on A paper. I saw a DSCR loan cash out investment property over 10% today. You know all that annoying shit like, oh yeah, back in the day I used to sell like 12%, blah, 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 blah. Well, we're about to be that generation again to tell the next generations. Maybe. I don't know. So, very, very interesting article I read today. JPMorgan Chase is sitting on $1.2 trillion in cash. That includes their loan loss reserve. $1.2 trillion in cash. The entire semiconductor market is $600 billion. They could buy literally every stock of every company that's in the semiconductor space and still have $600 billion left. It is a risk-off market. Money is on the sidelines. Big money. It's pretty oversold. it's risk off. And that liquidity drain is not good for mortgage interest rates. So people are talking about next year, here in October, at the Mortgage Bankers Association. We'll talk about next year. But we are an optimistic bunch. We're here. The ones that are here are optimistic. Or at least have enough money to pay for the travel budget for whoever the hell they send here. And look, people need shelter. 75% of all people that sell a home buy another home. And that's one of my favorite stats that I got from Logan Motoshami, lead Housing Wire analyst. Love that dude. He's out here somewhere. So if sellers aren't going to pay a higher rate for a higher price home, where's the inventory? So, people are lurking. The data says people are looking online. They're looking for homes. They're watching. They're looking at something to buy. But human nature is kicking in right now. They might just wait a little bit longer for maybe a reprieve in rates, maybe a reprieve in prices. Are they going to come down? How far are they going to come down? Look, we're all only human, and there's nothing smart about me at all. Like, human nature is human nature. We all feel the same feelings, right? So as the Mortgage Bankers Association meetings wind down tomorrow and then early morning Wednesday, everyone's going to go back home and build their business and continue to grind and fight for every single loan, whether it's through non-QM or emerging tech or your CRM or your tech stack, or just your leadership and your overall ability to just fight and win. It just depends on what your company's made of. And at the end of the day, people need shelter, and that's not going away. So rent's going up. People need homes. People still turn 33, get married, and have children. I went to an amazing wedding. My buddy Sean, you saw the video last week. If you didn't see it, go look at it at the rooftop of the William Vale. Housing is not going anywhere. If we have a $2 trillion year and you're coming out of a shitty year like 17, you would be amazed at a $2 trillion year. So as this industry continues to right-size its capacity model, we're going to feel a little more normalized. So hang in there. Last trade show of the year. Maybe my last road update. I might do some personal trips and give you some love from there. Thank you for all the love this year, for everyone on LinkedIn, building this community and serving all of us to have talking points to grow our businesses together and build our communities. Nothing but love for y'all. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.